Hello folks, this is Yash again here from Indian Insight, and I'm back again with another update on the markets. Now in our last YouTube video we talked about two scenarios. So our assumption of the price action here was that this was probably part of an ending diagonal pattern. Now this assumption was nullified on break of this 10,000 around 10,840 levels which we mentioned in our video. Now as outlined in that video, we expected that once this key level of 10,840 is broken, the markets would probably make a new high on break of these levels, and actually the price action since has been quite swift, and we actually moved quite high, and today I think we closed near all-time highs. So now that we are very close to our upside targets, now it's a good time to look at the price structure to determine whether the second part of our forecast that we did in our last video can play out. Now here I have shown the chart of Indian Nifty, and I have all the different my analysis also, and the price labels also mentioned here. Now in this chart, what I've shown is our primary assumption, which is marked as ABC. That basically this labeling came into play because we broke the crucial level of around 10,840. Now the measured price target for this C wave here, that is when I say the measured price target, I mean where the wave A and wave C are equal in amplitude. So this price target is around 11,390, 11,400. Let's take it around 11,400. We made a high of around 11,334. So we are now only 0.5% away from our target price. So now if indeed our assumption of this labeling is correct, then we should expect the prices to reverse soon, and Nifty and Sensex should actually decline in 5 waves, and this decline should be big enough so that they actually fall below their March lows. Now interestingly, the Fibonacci time analysis also indicates that around August 2nd is an important time level. I've not shown the time analysis here because that would be it would make it really crowded. But basically August 2nd seems to be an important time level. So a short-term trend change may be expected around this time, especially considering that we also have the RBI meeting on the 1st of August. So this was basically related to the base case scenario that we outlined in our last video. However, the beauty of using elliott wave theory is that it allows you to use latest information to confirm your assumptions before you basically act on any of your elliott wave labels. Now in this scenario, for example, we should also take into account the price structure from June 28 lows, where we basically assume that our wave C actually starts. Now a look at this price substructure actually tells us that this price structure looks more bullish than we would like. So for example, if we were to count this price structure as 1, 2, 3, 4, 5, now the wave 5 here looks much longer compared to waves 1 and 3. In fact, wave 5 is now very similar in magnitude to wave 3, and while this is actually not a violation of any of the three rules within elliott wave theory, so this could be a perfectly valid count and our base case scenario can be perfectly valid, but such a bullish price action should alert us to be open to other possibilities and wait for confirmation before acting on our assumed wave count. Now in the chart here, I have outlined another wave count that I'm tracking. This wave count has prefix ALT attached to it. Basically it stands for alternate wave count that I'm tracking. Now this alternate wave count would put the current price to be in wave 3 of multiple degrees, which basically would imply higher levels for Nifty. We also see that there is a gap price action here between 11,185 and 11,210 as part of this. This gap was created on 27th of July. Now this price gap action can be really helpful for us in determining which wave count to trust and how to position ourselves for the short to medium term. So typically, considering that this alternate wave count here assumes that we are in wave 3 at multiple degrees, now this price gap should actually not close, at least not in the near term. In fact, if we see that the prices are reversing and they end up closing this gap, it would be the first signal that our base case scenario is playing out, and then we would look at the price structure of the decline, the initial decline if it happens, and then we can confirm that our base case scenario is playing out. So in conclusion, what we'll do is we'll continue to be carefully bullish for some time, and especially as long as the prices stay above this gap zone of 11,185 and 11,210. So we'll wait for a declining price structure to confirm that our base case scenario is playing out. So that's it for now. I hope you found this update useful, and if you did, I would really appreciate if you could like this video and subscribe to the channel. Also, when there are short updates, I would directly be updating my blog, because it is faster for me to just write a couple of lines and update the scenario rather than creating a whole video. So sometimes I'll be doing videos on YouTube, and sometimes I'll be putting my short analysis on my blog itself. So if you haven't, then it would be good if you could also go to my website on indianinsight.com and subscribe to my blog. So that's it for now, and thank you for tuning in.